Hey everybody, Marty Mazzora, the 12th of July 2016. Quick commentary for you. This is your Tuesday video. Well, yesterday we did it. The S&P closed above its all-time high of last May. And I think the Dow actually did it as of today. But for the S&P, we've had 2 days now above that purple line there. And that's quite the accomplishment because we went a long, long time without a 52-week high, let alone an all-time high. So, folks, you may recall as I was going through the charts back in here, I was somewhat skeptical about the longevity of this rally, or that we would hold and make new highs. There were technical indicators that were kind of breaking down. We did break down a bit, but we held at a pretty high level and then came back and had a higher high. Brexit, of course, did a number on the market. But also, I think Brexit, at least for now, took the Fed off the table, and I think that got rid of what has been one major headwind for the market. Then you get good jobs numbers on Friday. You may recall last Thursday I suggested that we could get a better number, and if we did, it might give us the momentum to go through these all-time highs, and that's exactly what's happened. So, relative to the things I was saying before, looking at the same kinds of indicators, you may recall I was showing you things like the moving average, convergence, divergence, and relative strength. And while I can draw trend lines that might suggest, that maybe this isn't happening and so on, when you look at what's happening here and you look at these two lines crossing where they did, that's actually a very bullish technical pattern. I can actually probably leave this one behind for a while and take a look at what's been happening of late. So for this indicator to begin to say something really positive, we're going to want to see it continue to gain momentum and to basically turn into an upward slope like this one has. This has been a pretty good indicator, as I told you before, but what I've been seeing lately is encouraging, and it's a better technical look for this market than I've seen in a long, long time. What really is impressive to me is the breadth of the market. This is the advanced decline line. When the market goes up and more stocks advance versus decliners, and this is cumulative, it goes up. When we have more decliners, it goes down. This is the best looking AD line that I've seen in a very long time. And just to do a comparison, here we are back at that May, let me pull it back here, that May all-time high of last year. And as you can see, that advanced decline line was pretty uninspiring. We had all-time highs, but we didn't really have a lot going on under the surface. What this tells us is we had a few big cap stocks doing really, really well. And then this year, right from that bottom, we saw the breadth improve. I talked about this from a number of different angles, but this is a hopeful indicator that maybe we do get above these levels. I'm not offering any promises. There's a case to be made for the market coming back down and finding resistance there. But this is telling us that maybe we have better odds of sustaining higher highs than we have in quite some time. What essentially this tells us is that the broader market, most sectors, there's a few exceptions, but the average stock in the index is actually doing very well. It says better things from a macro perspective. The other thing I've been talking about lately that I think is very important and very key to market direction is just sentiment. And as I've been reporting, sentiment among individual investors has been pretty weak for the last several weeks. It's been improving, obviously, as things have gotten better. The mutual fund managers have been overweight cash and underweight stocks, which tells me, the way I like to say it, is everybody's been on one side of the boat. And when everybody's on one side of the boat, look for them to shift. And when they do, sometimes they do it in a big way. It also suggests that there's plenty of liquidity or capital that could actually come back into the market and allow it to gain some momentum. The other thing I was talking about back here that I wasn't really impressed with was volume. Volume's been better of late. We've seen better volume on these updates than we have on any previous updates. So reasons to be optimistic, I think, going forward. I make no promises. I've seen failed breakouts many, many times. This could be another one, but some of the underlying indicators are telling me something different than what they were telling me here for the last really 1.5 to 2 years. Beyond that, here is the New York Stock Exchange Composite Index, basically everything traded on the NYSE, and here's that May high. As you can see, there's a fair ways to go just yet before the broader composite index, basically the broader market, actually eclipses its May all-time high. And here's the FTSE, FTSE global index. And as you can see, when you mix in non-US stocks, and there are some non-US stocks that trade on the New York Stock Exchange as well, as you can see, there's some work to be done to the upside, but this is encouraging. This is an encouraging pattern here. If we can continue to move higher and get higher highs and overcome these lower lows, suddenly the technicals begin to look better. And then from a valuation standpoint, a relative performance standpoint in terms of how things tend to revert to the mean, dividends, and basically other metrics getting a little more fundamental, and the potential for profit growth, despite all of the headlines and all the concerns in many other parts of the world, it's actually where we're finding some real value in stocks trading at quite the discount to the US. And I'm going to offer some more specifics on that over the next few days and weeks. I do have one project that I'm putting together that really articulates why I think it may be a very good time to be looking outside the U.S. borders, or to have better expectations from the non-U.S. portion of our portfolio going forward. So folks, I'll just leave it there for now, and look for the TV interview tomorrow, and then another video on Thursday, and then of course the weekend commentary coming up. Thank you folks as always for watching and listening, and I'll talk to you soon. Bye-bye.